All right, let's talk about Malaysian income tax. We're going to crack the code on this one. Whether you're working right here in the country or maybe you're earning from abroad, we're going to break down the essential rules that decide what you owe. By the end of this, you'll have a really clear framework for understanding the whole thing. Okay, let's get right into it.
So, everything kicks off with this one super critical question. Is the income you're making actually taxable here in Malaysia? I know, it sounds simple, right? But the answer really hinges on just a few key factors, and we're about to walk through them so you can figure out that answer for yourself.
Okay, here it is, the golden rule. The single most important thing to get your head around is this. It is all about location. I mean, the big question, the one you always have to ask is, where was this money actually generated? That's what we call the territorial principle. And believe me, it's the foundation of the entire system. Just keep that one word in your head, location.
Now, this golden rule isn't just some friendly guideline. It's the actual law. And the master key that unlocks, well, everything is Section 3 of the Income Tax Act 1967. You can think of it as the legal engine that's powering the whole system.
Okay, I know what you're thinking. This looks like a wall of legal jargon, but seriously, don't panic. This one sentence, this is where it's at. It holds the two key concepts that define absolutely everything. So let's break them down right now, starting with that first part.
So, the first way your income can become taxable is if it's derived from Malaysia. Now, the easiest way to think about this is earned here. Simple, right? If your profit-making activity is happening inside Malaysia, like running a shop in KL or doing a job in Penang, then that income source is Malaysian. It was earned here, so guess what? It's taxable here. That's it.
All right, path number 2 is a little different. This covers income that's received in Malaysia from outside Malaysia. Let's call this one sent here. So this is for when you earn money from a foreign source, say dividends from a company in the US, and then you physically bring that cash into a Malaysian bank account. And this rule, it's especially important for tax residents.
So there you have it, our two main pathways to getting taxed, income that's earned here and foreign income that's sent here. And understanding the difference between these two, well, it's absolutely crucial. Let's put them side by side and see how they really stack up.
Putting them next to each other like this makes it crystal clear, doesn't it? Derived from Malaysia, or earned here, is all about the source of the profit. Where was the actual work done? Where was the business conducted? On the other hand, received in Malaysia is purely about the movement of money. The income was earned somewhere else, abroad, but it's now been brought into the country.
Okay, let's look at a super clear example. You've got a business operating completely within Malaysia, and it earns $500,000 ringgit. Is it taxable? You bet it is. Yes, absolutely. The activity that made the profit is happening squarely within the country's borders. That makes it a classic earned here situation. No question about it.
Now, let's look at the flip side. Imagine a Malaysian engineer working full-time in Dubai. Her salary gets paid into a Dubai bank account, and it just stays there. Is that taxable back in Malaysia? Nope, not at all. See, it fails both tests. It wasn't earned here, and it wasn't sent here. This is the territorial principle in action, perfectly illustrated. Okay, so we've totally nailed the idea of location. But there's another really important layer to all this, your personal status. In the eyes of the tax office, are you a resident or a non-resident? Because that distinction, well, it's a total game changer.
Yeah, your residency status completely flips the script. If you're a tax resident, the net is cast a lot wider. You're taxed on income you earn in Malaysia and on most foreign income you decide to bring into the country. But there's an upside. You get what's called progressive tax rates, and you get to claim all these valuable personal reliefs, for things like lifestyle expenses or supporting family, which can really lower your final tax bill. Now, for a non-resident, it's much, much stricter. You are only taxed on income that's earned here, but it's at a flat rate, and you get zero of those personal reliefs. A big difference.
And that brings us to the one area that honestly causes the most confusion. Foreign-sourced income, or FSI. This is that sent-here money we were just talking about. Just think of this as a special level in the game, and it comes with its own set of rules you've got to know.
So, if you're dealing with foreign income, just follow this simple checklist. Ready? Step 1. Is the source of the income truly foreign? If yes, great. Okay. On to step 2. Are you a tax resident? Now, if you're a non-resident, you can just stop right here. Your FSI is not taxed in Malaysia, period. But if you are a resident, then we go to step 3. Did you actually bring the money into Malaysia? If the answer is yes, we hit the final and most crucial question. Does a special exemption happen to apply to this specific type of income?
Right, and beyond that checklist, there are some pretty powerful principles at play here.
First off, the system is designed to avoid double taxation. So if you've already paid tax on that income in another country, you can claim something called a foreign tax credit to lower your Malaysian tax bill. But, and this is a big but, you must be able to prove you paid it. That means keeping detailed records like your foreign tax receipts is totally non-negotiable. And another huge point, certain types of foreign income, like most single-cure dividends, are often exempt for individuals anyway. So it's really vital to know if your income qualifies.
Okay, we've covered a lot of ground, so let's boil it all down to a final cheat sheet. If you don't remember anything else from this, remember these 3 core ideas.
First and foremost, it's all about location. Malaysia's tax system is territorial. The number one question you should always ask is, where did this money come from?
Second takeaway, who you are matters a lot. Being a resident versus a non-resident fundamentally changes the rules of the game. It impacts everything from your tax rates to which income is even on the table to be taxed.
And finally, number 3, it all comes back to the source. Your income is taxed for one of 2 reasons. Either it was earned in Malaysia, or, if you're a resident, it was earned abroad and then physically received in Malaysia.
So there you have it. That's the foundational code of Malaysian income tax. We've gone through the what, the where, and the who. So the final question, that one's for you. Now that you know the rules, how does your income stack up?